feel like I'm watching a horse race. The bars keep moving on you. Just when you think you're about to say something about what we're seeing on the bars, they change. So we've had a fair number of people who have actually changed in the last 3 years, but most people have been on their system 7, 10 plus years. It's not uncommon for us to see people been on the same accounting system for 20, 25, and 30 years these days. I think that trend is changing. I think people are becoming more open to the fact that software changes and evolves, and being stuck on a single platform for a long period of time has challenges. Next question. Have you considered a cloud-based accounting solution? A for yes, B for no. So it seems like most of the audience is open to a cloud-based solution. Asking this question 1, 2 years ago, that would have been flipped. How are you currently handling grant reporting? A, for my system does it all. B, I export and manipulate in Excel. C, I don't have grant reporting. About a 50-50 mix of those who have grant reporting versus those who don't. Those who do have the grant reporting seems to be a manual process. How are you tracking your metrics and KPIs? A, for my system does it all. B, for I export them and use Excel. I don't have time to do this. C,
that's a KPI.
You know what a KPI is? You probably aren't doing them. So for those who don't know what a KPI is, key performance indicator. So what metrics is your business, the executives, the managers of the business, what are they looking at on a regular basis to determine how well your business is doing?
Different.
And, you know, I think gone is the day of you handing the full P&L and balance sheet to non-financial people and expecting them to know how to read that and what to do with it. We should be determining what are the key things that is important to the business and give them quicker visual information on what the story in the P&L and the balance sheet is telling them. And those key performance indicators help drive decisions and better conversation and interaction in the organization. How long does it take to close at month end? A, for less than 1 week. B, for 1 to 2 weeks. C, 2 to 3 weeks. D, more than 3 weeks. This will go pretty quick. Less than a week time frame.
We want that.
Probably a little more in that top line than I'm used to seeing, but that's good. There's concepts coming and challenges to the old way of thinking about this close process. Some of the new systems and solutions are challenging us to think about a daily close. You know, why do we have to wait 1 time a month to do it? Why can't the system be up to date and have accurate information without having to go through this laborious close process that for many of you take more than 3 weeks to do? Think about how much time has elapsed before you get that information to the right people to do anything with it. So I mentioned Jim Norton. He's a senior consultant in our software consulting group. Jim is a CPA. Jim has sit in the seats of many of you when he worked for a chamber association, when he worked for Meals on Wheels. And Jim's pretty passionate. People call the tech guys geeks. Jim is the geek on steroids, and I say that in the most loving way possible, but he loves the accounting and the not-for-profit components of it, but he loves to automate it with technology. So please welcome Jim, who is going to share with you some of the things that we're seeing in the not-for-profit accounting world. Thanks, Jim.
Thank you. Hello, my name is Jim. As Jason said, I'm a senior technology consultant with our software consulting team, and I am based in Connecticut. I just got here this morning. My day started at 3, but I have 3.5 coffees and a Monster in me. So you guys are going to catch the tail end of my caffeine high. But I'm happy to be here. I'm really excited to share this with you. I love talking about and doing this stuff, and I think there's a lot of great insights that we're going to talk about together. I've been in a mix of the public accounting and private industry for probably over 10 years now. I do have a nonprofit niche and specialization. It's where I think I know the most about accounting and technology space. The types of organizations I've worked with, pretty much every kind of nonprofit that you can imagine, I've touched at some point. So I was the CFO of one of the biggest chambers of commerce in Connecticut. And I know you're probably like, well, Connecticut has 20 people, so big deal. But we actually have 27. And we have the best pizza probably in the nation. So it's a good place to be. I also worked with social service organizations who do things like Meals on Wheels, but also who do programs for the youth to promote kind of keeping the youth out of trouble in lower income or high crime areas. Worked with the only sign language interpreting program that's in the state of Connecticut. That was one of the things we did in our agency. We had financial literacy programs, we had homelessness prevention, we had a program called the Community Closet where people could go shopping for like their daily needs. So truly it kind of covered all the different things a nonprofit does, worked with C3s, worked with C6s, and really enjoy that kind of work and understand the challenges that come with that. So one of the things that I want to be going to be talking with you today about is the changes that have happened relatively recently in nonprofit accounting. So nonprofit accounting today is not the same nonprofit accounting that we saw 4 years ago. So we're going to talk about the changes that have come up in nonprofit accounting, what kind of challenges that poses for you, which you may not have had to think about before and which have probably added extra work. And then I want to talk about the digital transformation that's going on in the accounting industry in general and how you can take advantage of that as a nonprofit to make your tasks easier and make it take less time for you. So these are kind of the first points that I want to cover, which are what I see as major challenges in the nonprofit industry. The first point I think is probably the most important. Obviously, I put it first for a reason. So, and I think it is that there's an exponentially growing demand for you guys to have faster, more granular, more transparent reporting. And I mean, that's no secret to anyone in this room that most of your financial data is public record. I can go on and find anybody's 990 in this room pretty easily. Depending on if you put them on your website or not, I can also find your audited financial statements. So your requirements to have those statements be top-notch, accurate, timely are, I would argue, probably even more strenuous than your for-profit counterparts, because I can't necessarily go find any for-profit business's financial statements easily online. And the decisions that funders or potential donors are making around whether or not they're going to fund you are often going to be based on data that's found in those financial statements, right? So, and then in the digital age, people are now demanding that they can have that information. Before, it used to be if it's not on your website, it's not a big deal because people just don't do that. Well, now people do that. So the demand and people's kind of demand for instant gratification has never been more than it is today. And I think it will only continue to get more extreme. Other thing, we're working with the aftermath of the biggest accounting standard changes in 20 plus years. So we had major changes to FASB's nonprofit accounting standards that impacted almost every area of nonprofit accounting and financial reporting that you now have to contend with and make sure that you're able to handle correctly, because those are going to have an impact on your audited financial statements. The next point, industries within the industry. So I think that more so than many of the other industries that are out there, nonprofits have a unique position in terms of just explaining what they do, right? So if you're talking to someone and you simply say to someone that you're a nonprofit, most people have no idea what that means, and they probably assume that you're like the Red Cross or something, because those are the kinds of things that people identify with. But if you say to someone, you know, we're Meals on Wheels, or we are a chamber of commerce or a trade association, they kind of get the idea of what you do, and then immediately they start thinking of the different metrics that they would evaluate you on. Like if you're talking to a financial person. So if somebody tells me they're Meals on Wheels, immediately I'm going to start thinking about, okay, well, I need to know what their cost per meal is, like how much of those reimbursements that they get for their meals are going to go towards overhead. And those are the kinds of things I'm going to think about when I'm making a funding decision, right? In a for-profit kind of situation, you could say, you know, I'm a retail store. People understand what that is right away. So you have an increased kind of burden and also unique set of metrics for each of the little sub-industries that is within nonprofit, right? So I could think about a different metric for every single one. And then the last one is probably very obvious to everybody that is sitting in this room, which is that you have tight and limited human financial resources. And what that usually means is you're not just going to be the CFO, or you're not just going to be the controller. Normally, if you're in a nonprofit organization, you are CFO and head of HR and head of IT and the operations manager, and then somebody who checks people in at the events too. I mean, that's what I did when I was a CFO at the chamber. So that's just a reality of working in the nonprofit industry. You probably could stand to hire 2 or 3 more people had you the budget for it, but you don't. So the focus now, especially in light of all these changes that are coming up and the demand for constant, more granular information, is how can we do more with less human resources or the same amount of human resources? And technology has got to be the answer to that, to do it in a cost-effective way that scales. So I'm going to talk through some of the major accounting standards that have changed. For those of you who would want a Googleable term for this, you can go and look for ASU 2016-14, topic 958. And that is the standard where you will find FASB's guidance on nonprofit accounting and financial reporting. Now, these changes are not brand new, but I think that it's important to talk about these changes because they're new enough that you maybe have only had 1 year of audited financial statements with them under your belt. And it's important to reinforce the extra work that these standards have made for you and the different ways that you have to report so that you can begin to think about, and we can talk about some digital ways that you can solve those problems. So this standard change affected all of these areas that are on this graphic here. And I won't go into laborious detail on all of them because some of you may be familiar with this already from working through your audits. But one of the biggest ones was changes in your net asset classification. So prior to this change rolling out, your net assets were broken up into 3 categories, which was unrestricted, temporarily restricted, and permanently restricted. Now, under these new standards, you have 2 categories, which is with donor restrictions and without donor restrictions. However, you have not lost the requirement to break out the nature of your restricted net assets. So in my opinion, it's like big deal. They changed the label, but you still have to report the same thing. Right? And you have to be able to disclose either on the face of your financial statement or in the footnote disclosures to your audited financial statements, what are the restrictions on those donor restricted net assets. And another disclosure requirement that came along with this was in your unrestricted net assets, you can have board designated net assets. Well, previously, you could label it board designated and move on with your life. Now, if you have board designated net assets, you need to disclose what is the nature of those board designated net assets. It's not good enough to say, they're board designated and that's it. You need to say why they're designated. So imagine nonprofits who probably had board designated net assets sitting on their financial statements for 30 years, now all of a sudden have to go figure out what those were designated for. Right? I would probably just say it was released from restriction, call it a day, but you may not be able to do that. So you have to be able to disclose that. For investments, so there have been a lot of increased disclosure requirements around investment, and you'll find that's a common theme with a lot of these changes. A lot of it comes back to increased disclosure requirements. And then the question that naturally leads you into is, well, where are we tracking those disclosure requirements so that we're able to report them back easily? Okay, so with investments, you need to be able to report your investment revenues net of their related investment expenses. That's important. You need to be able to disclose any kind of underwater endowments that you may have. Those are biggies in investments. With liquidity information, again, increased disclosure requirements. What they really want to know here is, what is your available cash? And available cash is going to take into account the cash that you may have on hand but is restricted. You're going to have to back that out. So your disclosure of available cash may not be as pretty of a picture as you were able to print to paint before, but it's a required disclosure now under the new standards. Not finally, but reporting of expenses. The last blue one, we'll say that. So for reporting of expenses, you need to be able to report your expenses by nature and function, which doesn't say outright that you need to do a statement of functional expenses, but I say just do a statement of functional expenses, because it's easier to do that than to do all the tap dancing around to report them by nature and function, right? So for a statement of functional expenses is substantially mandatory for everyone at this point. For some of you, it was already a thing you were doing, but for some organizations, you didn't have to do one before. Now it needs to be part of your audited financial statements. Cash flow statement, not a ton changed. You're able to present either the direct or the indirect method. And if you are presenting the direct method, you no longer have to show the reconciliation back to indirect. So that's your little bonus there. And all of this kind of points back to NFP note disclosure. So all these things that we just kind of overviewed are going to give you a requirement for increased note disclosure in your financial statements. The other thing that changed was the revenue recognition standard. So this is not, the reason it's on a different slide is because it's not really part of ASU 2016-14. This actually comes from the next Googleable, which is ASC 606. And that is a standard that came out around the same time, which is affecting how revenue recognition has to be handled when you have what is called a multiple element arrangement. What is a multiple element arrangement? Well, think the simplest example I can give of it is, imagine you sell somebody a giant pet sponsorship package. In that package, maybe they have a sponsorship to an event, maybe they have tickets to that event included, maybe their membership is in it, maybe their free parking or something is in it. Previously, it would have been pretty easy to kind of straight line that revenue recognition over just whatever the life of that contract was. Now, you need to identify what is the value of each of those pieces of that bundle that I sold them. And then you need to recognize the revenue based on each piece's kind of proportionate share of that value. And I have a slide in a couple of minutes where I'll show you an example of this. But that's the general idea. And these points kind of just highlight that. I'm not going to read all the points. Instead, we'll just focus on the core principle, which is you recognize revenue when or as the goods or services are transferred to your customer. So then the amount of the revenue recognized should represent the consideration that you expect to be entitled. So this slide is an example of kind of a bunch of different scenarios and how your revenue recognition treatment would have been under your previous standards and how it is under the new standards. Now note, although there is a difference between the previous treatment and the new standard, in a lot of cases, you may still end up with the same result at the end of the day. So if we're talking first about a federal or other government grant where you're using a cost reimbursement model, that's what we had for Meals on Wheels. We would have to bill them back when we incurred the cost for the meals. Previously, there were exchange transactions. Now, under the new standard, there are donor-restricted conditional contributions released as appropriate. What does that ultimately mean? The timing is probably the same if the condition and restriction are met simultaneously. I can think of very few cases I don't think I can even think of one, if I'm being fully honest, where it would be different that, when you bill for kind of those services versus when you would recognize and consider that unrestricted, because you've already performed and incurred the cost. And that would be the condition that would require the release. The next one is federal and other government grants where you receive funding up front. Previously, exchange transactions where you had funded portions that were subject to return sitting as deferred revenue on your balance sheet. Here, most of them are actually going to be donor-restricted conditional contributions that you release as appropriate, unless you still have a funded portion that's subject to return. So the key thing to think about and consider here is, am I going to have to give this money back that they fronted me if I don't perform this service or if I don't meet some kind of metric? If you are, then there's a very strong argument that you probably have deferred revenue. If not, you've got a donor-restricted conditional contribution. And as we say in the impact, again, timing would likely remain the same here. The last one here is restricted grants with funding received up front. So the way that this used to be is that you would account for the entire grant as a temporarily restricted contribution and a temporarily restricted net asset after your condition is met. Under the new standard, same principle that I just kind of highlighted before, is any funded conditional portion that's subject to the right of return is going to be deferred revenue on your balance sheet. So these may not be a humongous impact if you really think through your different funding situations, but it is something to note that you do have to think through. Do I have something that is funded and possibly subject to return? And if I do, then it probably should be deferred revenue. This next one is a new 4-syllable word that you can add to your repertoire. It's called bifurcation. And I had never heard it before I started doing these presentations. But basically the concept of bifurcation means that you take a package that you've sold someone and you split it out into its component parts, and you're allocating each part's value based on its pro rata share of the value. Right? So you segregate and you apply the guidance for each portion separately. So common examples here, membership dues. Like, so when I was at the chamber, when I first got to the chamber, they just sold dues and they sold sponsorships and tickets and everything was a la carte. That made it really easy for me. Well, the trend in this world is to move to packages so that you sell them all at once and you're not constantly having to hit them up throughout the year for different things, which is great. And it makes the salesperson's job probably easier. It did not make my job easier. It does not make your job easier. It now requires you to kind of have to look at this package and do this analysis of, okay, when does each of these have to get recognized? What of this, if any, can I call a contribution and possibly straight line? And what is the value of each of these things? Because inevitably, when you sell somebody a package, you're going to discount it. They're not going to get everything at its a la carte pricing. Otherwise, what's the point of doing a package in most cases? So this is the example that I alluded to a few slides back. So this example is a children's museum membership. Could just as easily be any kind of membership or sponsorship package. But in this package, there's an annual fee of $300. And so in this case, they're actually going to pay more than what everything is worth because there's a contribution component, which is not at all uncommon in nonprofits either. So an annual fee of $300, and for that annual fee, they receive a monthly newsletter, which is valued at $60. They receive this at-home learning activity guide, which is valued at $50. They get free admission for 2 adults and 2 kids, which is valued at $60. Parking, which is valued at $20. A $50 discount for a birthday party, which is valued at $50. And then that's it. So the rest of it is the balance, which is $60. That's the contribution. So under the old guidance, which is ASC 605, you would take the $60 contribution part and recognize that right away as an unrestricted donor contribution. The rest of this package, you would have straight lined $240 over 12 months. That's a deal for a year. Well, now under ASC 606, your $60 contribution is treated the same, but each benefit is either going to be recognized as it's used or at the end of the term. So what that means is somebody now has to figure out, when did they access that at-home learning activity guide? When did they use that admission? when was that birthday party, and recognize it in the correct period. And think about why you have to do this, because what would your financial statements look like if you just straight lined everything versus recognized it at the time it was actually used? You'd potentially be either overstating or understating your revenue depending on when those things took place. If you were straight lining everything and something crosses fiscal years, you may have a different balance than if everything was actually used up before the end of the fiscal year, right? So maybe you're shorting yourself revenue. So that's the idea behind this. And it could easily swing the other way too. You might have nothing used, but you'd been straight lining, so then you have all this revenue that doesn't belong there. So that's the idea behind 606, and that's kind of the impact on nonprofits, particularly when they have sponsorship package deal kinds of things. So that was fun. Now I'm going to move on to, I think, the more fun topics. So we're going to talk about the digital era for nonprofits. What I'm going to talk about is several of the key things that you're working with or that impact you on a day-to-day basis in your role as an accounting finance person, and what kind of the old way of doing it is, and how digital transformation is changing the way that you can handle that and making your life easier. First of all, I'd like to open with a meme. I think it's appropriate to do that in 2020. And this one is one that I stumbled upon, asking how many hours a week you spend in Excel. And this says more than I spend with my family. That was definitely my reality as a CFO in the Chamber of Commerce. By the way, for the polling question about your close, I was with some of you that did it in under a week, but in order to pull that off, my week was probably 70 or 80 hours. So some of you may be in that same boat, and that's how you close so fast, because I did a lot of manual work in Excel. This next quote is a quote from Accounting Today, which is I see good articles pop up on there from time to time. And in November 2019, they had a good quote about the difference in accounting software that understands nonprofit versus just kind of your off-the-shelf software. And I think that it's important, and I definitely agree with this, having been on the side of the table of the person actually doing the work, is that nonprofits have so many different reporting requirements than other businesses, right? You can't take a software off the shelf that, the grocery store or the little, good example of a business, even like a service business is using, right? And apply it to nonprofits. It's not going to know anything about restricted donor contributions. It's not going to know anything about grant reporting. It's not going to know anything about grant billing and tracking, because softwares aren't built to deal with the needs of the nonprofit space. Things like QuickBooks, things like, maybe even Great Plains, all those kind of long-standing softwares that are out there aren't necessarily built with an understanding of the nonprofit organization in mind. So that's what this is getting at, and what you're inevitably driven to when you have an accounting software that doesn't understand your industry is dumping the data out of it and doing everything else you need to do, probably in Excel, or maybe Google Sheets, so that I'm not just constantly hammering on Excel. But it's the same concept, is that you're going to be doing all the manual work. So the technology land space in general, I'll open with that. So the old way of working in a nonprofit, and my chamber was definitely like this when I first got there. It was low or no tech. It was heavy reliance on manual processes. Word in Excel to fill in all of our gaps. Little or no time for value-added insights and analyses. Like, there was no cash flow forecast when I got there, for example. And server-based systems. The problem with a server-based system, and the reason that I call it out, is because server-based systems can go away when the server dies, right? And that actually happened to me when I was the CFO of the chamber, and we had to do an emergency server replacement, which cost us like $25,000 for the emergency call, and I was still paralyzed for 3 days, unable to do anything during month end. So that's a reality of the risk that you have with a server-based system. And I'm sure I'm not the only person that has a story like that. That's the reason that people kind of frown on server-based systems more and more nowadays. And of course, we had been telling other people within the organizations that the server was on its way out and they needed to do something about it. And it was one of those things that kept getting put off because of budget concerns. I became a big budget concern when we had to pay the emergency IT consulting bill. So the new way is integrated tech. So rather than not having any tech and passing around paper and having all these, manual sign-offs, just have everything integrated so that it either happens inside your system of record or happens inside of a system that is directly linked to your system of record, so that you're not wasting all of this time putting data into both systems, reconciling data between the two systems and making sure it matches, right? Manual processes are going to be replaced with automation. So I'm not going to have to sit there and key in a bunch of stuff that's in the other system anymore, because it's going to either import in or sync in. Your use of Word or Excel is going to decline. It's not going to disappear, because I never agree with a claim that extreme. I even use Excel on occasion, but it's going to decline drastically because your software should be able to handle almost everything that you're doing inside Excel without you having to do that. Human resources are going to work on tasks that add value. So you're not going to have people who are just sitting there data entering anymore. You're going to be able to use those people to help you provide insights and analyses that can help further your mission. And then, of course, cloud-based system is one of the big trends that's in the technology space right now. Next up, accounts payable and employee expenses. This is a major function for probably every nonprofit. The reason that we usually take in a lot of money as nonprofits is so that we can turn around and spend it on our mission. So previously, you could have an entire department that's devoted to accounts payable and employee expenses. I've worked with some nonprofits that do still have that. And the reason that they have that is, by the way, usually the next bullet point, where they have paper-based workflows where they are getting all their invoices. If their invoices are emailed to them, they're going to print them, and they're going to fill out this form and write the coding in on it and then staple it to it. And then they're going to maybe have a stamp that says when they received it. And they're going to stick it in a red folder and walk it down the hall to somebody else's office, and then wait for them to get back from vacation next week before they're allowed to enter it in the system.
Have you been in our office?
No, but it sounds like it was just like mine. So that is a day in the life and reality in nonprofit accounts payable, right? And I hated it, but I also was part of the problem before I started to implement tech, because I put the processes into place that didn't allow my office manager to enter things until I approved them. But that, what else are you going to do when you don't have tech? So that's the way that the old way kind of works. Consequently, you have a long approval and payment cycle. Things can't get paid if they can't get entered. And things can't get entered if you don't have the signature on the form in the red folder. So that's just kind of how it works. Credit card reporting is atrocious. And it's never going to get better fully, if I'm being honest, because some part of it relies on people submitting their credit card reports, and we all know that doesn't happen 100%. So it's a holdup, and you have spreadsheet and Excel and Word templates for everything. And I made some of the fanciest Excel worksheets I think that I could imagine in my life. I wasted so much time on it looking back, but you probably have them because you don't have any other choice. I thought it was so cool that I had data validation in my cells and I locked cells so people couldn't add things to them. But guess what? When I had a new GL account number, I still had to go update that account, that Excel sheet, and then hope that people used the right Excel sheet after so that they had access to that account number. So problems like that are symbolic of the old way. The new way, your need for human effort on all of this stuff is going to decrease. So what do you do with that extra time that they're going to have? Give them value-added work instead. We have electronic workflows. So now you're going to be submitting your bills into a system, whether it's your system of record or whether it's something like Bill.com or an Exonia or whatever, and they'll get electronically routed for approval workflows, which somebody can approve from an app. So if they're out meeting with funders or donors or whatever, it doesn't matter. They can approve it on the go. You don't have to wait for them to get back to their office next week so that you can enter things in. In fact, you already done the data entry. You're just waiting for them to approve it so that it syncs in and posts. So there's a lot less delay. Things are going to be more real time as a result of that. Same is true of the payment cycle. You can have them approve. You don't have to wait for them to physically sign a check. We're like the only country in the world that still heavily uses checks. So if you're using something that's an AP automation solution, it doesn't necessarily have to be a paper check. If vendors want it, the payment solution will send it to them. But if it's not an absolute requirement, they can get ACHs, and they're probably going to be happier because they'll get paid faster. So all of that is just going to speed up the process, and it'll be less stuff that you have to worry about batch entering at some ungodly hour when people finally give you back the red folder. Credit card reporting can be automated. So it's a step closer to getting them to submit their reports, right? You still have to fight that battle, and I can't help you with that. And if you can create something that automates that, then you can retire tomorrow. But for the most part, credit card reporting can at least be automated so that your transactions are feeding in, and then people have them available to classify. So they don't have to wait for the statement. They don't have to sit there and write on the statement what everything was for and then staple all the receipts to it. And then you have to sit there and match up all the receipts to the statement and make sure they're not missing any. They can just take pictures of the receipts on the go and attach that to the transaction and code the transaction for you. And then your role becomes more review, less data entry, and you're also getting all the backup in real time. Makes your audit easier, of course, but it also makes your accounting easier. And if people just submit their reports, then you can get stuff faster, right? And you can speed up your close process. I'm fully aware that the credit card reporting is always going to be a frustration, but it's easier when you have something like this. And of course, all of this is integrated with your accounting, which eliminates the double entry. Accounts receivable and grant billing. So it's kind of a 50-50 split in this audience as to whether or not you really have to worry about grant billing. But for those of you that did, some ways that you may have dealt with this before in the old way is you would have a separate GL account for any expense that was going to be billed back to the grant. So you could isolate what is travel and what is travel that's billable. And then you did a really great data dump and figured out what your bill back to the grantor was. That gives you, first of all, a really long chart of accounts. It opens you up to risk of, are people going to choose the right GL account? And it's just cumbersome to maintain. Your invoices are probably created in Word or Excel because you get one template. And if it doesn't work for your grantor, then too bad, stick it in Word or Excel. That's kind of your solution. And your underlying detail may not even be in the accounting system. You might be taking it out of somewhere else, making a summary entry that says travel expenses, and then saying like, see Google Sheet for the breakout of what's in here because you don't want to spend time entering 12,000 lines. So that's the old way. Can you hear the pain in my voice from when I had to do all this? That's how it was. New way, there's a billable flag in your system of record for reimbursable expenses. So if this needs to get billed back to a grantor, just check that box. You can actually even have it default. So you could say, if they're using this grant ID, that billable flag is going to auto-populate. So you don't even have to worry about people doing it right. And then you're really just kind of be reviewing on an exception basis if there's something you may choose not to bill back. Invoices are going to be generated by your accounting system. I don't know how people do AR when the invoices aren't in their accounting system, but some people do it. And then that, of course, creates a reconciliation between your accounting system and whatever sheet you're tracking all your grant billing on. So if they're all in your accounting system and they're generated, then your detail and support is going to be readily available in your general ledger. So you're going to have, on a line item level, what actually made up all of those charges, so that when you have to give a detail for audit, it's just coming out of your system of record, rather than having to make sure it agrees to your system of record before you give it to the auditor. Revenue and expense allocations. In nonprofits, this is certainly a big thing. Allocations, I think, are increasingly more important, especially because you now all have the statement of functional expenses. So you may have gotten away with not having to deal with much allocation before, but now the standards have kind of imposed that on you. So you have to allocate your expenses into all their different functional categories. And in most cases, you do have to come up with something that goes towards fundraising as well, which some people used to not have to bother really doing. So old way, of course, they were low priority, maybe once a quarter, once a year sometimes. You just kind of do it for the audit. What's the problem with that? I think the problem with that is that you don't get true insight into what is the cost of actually running these programs, because the program has to cover more than just its direct cost of operating. There has to be some contribution for the work that we are doing, for the work that the executives are doing and running the organization and going out and trying to raise more funds. Like, all of that has to be covered somehow, and that has to be covered by some portion of indirect that is allocated to your programs. Even if you're not billing it back to your funder, it's still important to see that allocation, to know what is the true cost of carrying this program. And if this program is a giant loser, is it impactful enough for me to keep doing it in my organization? Or is it not helping that many people and sucking money out of us, so I should just cut it? Those are the kinds of decisions that you can make, but you can't make them if you don't have information about what is the true cost of your program. And then it also helps you to be able to prepare a what-if analysis where you say, if I took this program off the table, the rest of my program sustain whatever portion of that overhead that program did cover. So all that kind of analysis, you need allocations to be able to do that. So it goes deeper than just being able to produce a statement of functional expenses. Now, in a lot of cases, these are handled outside your accounting system. I was definitely handling them outside my accounting system. And what that meant was I'd go and I'd export my financials to Excel, and I would calculate what each entity's share was of a certain expense, and then I'd allocate other expenses based on that. And the minute I made a journal entry or booked another AP bill, I got to do it all over again. So it would be an exercise which had no less than 10 iterations at any given month end. Right? I'd go in, I'd do something, look at the journal entry impact, do it again. It was incredibly time consuming, which is why for a lot of people, it doesn't happen very often. And I had really fancy spreadsheet formulas to figure out my allocations for me. And then they broke, and then I spent time trying to fix those. So it's a really painful process. The new way is that they just kind of happen automatically because your system of record knows how to do them and can calculate them for you and post the entries. If something changes, you just rerun the allocation and it fixes it for you and you get your allocated results. This is like a week saver sometimes. It used to take me a week to do allocation, so it literally can be a week saver. And the system logic is very easy. You tell it, allocate this based on that, and it will figure it out. And we'll see that when we get into our demo. Dashboards and KPI tracking. So none of you, based on our survey results, currently have time to really handle dashboards and KPI tracking, which is not surprising. It's very common in nonprofits. I didn't get into being able to do dashboards and KPI tracking probably until 6 or 7 months into my role as CFO, because I had to get out from under the giant mess that I inherited, and then I had to try to get things moving faster. Then finally, I could focus on dashboards and KPI tracking. Problem is, what were we missing out on all that time that I wasn't able to do it? And that's why dashboards and KPI tracking is so important to have as a key component of your accounting system. Now, the old way is you make the program managers do it themselves. And in the social service organization that I worked at that had Meals on Wheels and sign language and all that, in a lot of cases, the program managers did make their own dashboards. And then we had a bi-weekly or monthly arguing session about whose numbers were right, because they were using it based on whatever their source of truth was. I have no idea what their source of truth was, but I know it sure didn't match the accounting system. So it wasn't a productive, we wasted a lot of time reconciling the data between each other before we could talk about what the KPIs actually were and what they meant about how their program was performing. What you can do is you can get an add-on software that maybe syncs or you can import data into to try to make this easier for you. The minute you change something, of course, you have to redo it all over again. So it's not an ideal solution. In the old way, they're only created sometimes if or when a program or grant requires it. So sometimes if the program doesn't require any kind of KPI reporting, people just don't do it. But in the nonprofit industry, the focus is becoming increasingly more on unit metrics. So even if you're not doing something like Meals on Wheels where you have a unit rate reimbursement that's federal, you still may want to know if, say I'm an association or a chamber of commerce or any kind of membership association, I might want to know what is my revenue per member, what is my cost per member, what is my cost to acquire a member, because all those kinds of things can be benchmarked against other organizations, and I can know if I'm really blowing it as a chamber of commerce or if I'm doing about what the industry expects. And if you don't have dashboards and KPIs, you could be totally underselling maybe your memberships and your sponsorship packages, and you would never know that because you're not calculating it to compare against your peers. So then, of course, the last bullet point on the old way is none at all. So in the new way, accounting systems should have dashboards. I mean, it's just kind of that simple. And the dashboards are going to give you the calculations of those unit metrics. They're going to say, this is how many clients you served. Here's your revenue per member. Here's your cost per hour. Anything like that, any kind of unit metric you can imagine can be calculated. And it will be updated in real time as the data flows into your system. So as you're posting transactions, your calculations are updated. You've got charts and graphs and things that you can show to non-financial people that mean something, other than, as Jason said, it doesn't really happen anymore where you can just stick a P&L in front of someone and it's a given that they understand it. And sometimes they're going to make decisions based on what they think the P&L means. So you want to be in control of that as the accounting and finance person, and dashboards and KPIs are a great way to do that. And they should be native. It shouldn't be something that you have to purchase an add-on to be able to do a dashboard. And they should be refreshed, and you should have as many as you want. And this is an example of what a dashboard looks like, and I'll be showing it also on screen for those of you who might think it's too small. It's pretty small from where I'm standing, and I'm this far away from it. But I think it's better on your screens actually than it is on mine. So this is going to give you, and this happens to be a dashboard in Sage Intacct, which is called the Nonprofit Board Book. This was developed in partnership with GuideStar to analyze the kinds of metrics and KPIs that people are interested in knowing when they go to visit someone's GuideStar profile. So Sage Intacct knows the nonprofit accounting space, I think, probably better than any other software vendor. And I think that they spent the time with GuideStar to really understand what these things are and create pre-built dashboards with reports that give insights into that kind of information. So you see things like asset composition. So how much of my assets are cash? How much are receivables? How much are my fixed assets? You could see useful versus depreciated life. That could be a really important metric depending on the organization that you're in. I know that when I was in Meals on Wheels, that was a very important metric, because if my trucks were fully depreciated, that meant it's going to be time to have to buy a bunch of new trucks soon. Otherwise, our repair costs are going to go through the roof, or they're going to break down, and then we're going to have service delivery issues. And you can get insight into that kind of information if you have graphs like this and you know how to interpret them, which as accounting and finance people, you do know how to interpret them. All right, and then your liability composition, how much debt, what kinds of debt, what's AP, what's current, what's non-current, what's deferred revenue, all that good stuff. And then a composition of your net assets, meaning how much is restricted and how much isn't. Obviously, we love unrestricted net assets. They're much easier to manage, but the reality is there's going to be some restricted in a lot of nonprofits, and you have to report on that and manage that and make sure that you can substantiate that those net assets have been released from restriction properly. Reporting and customizations. I think this is my last slide in the old versus new way section. And reporting and customization in a lot of systems is very cut and dry. You don't have any. So you can take the reports that come out of the box and live with them. And if you don't like them, then export them to Excel and manipulate them to get something that you want or something that you need because a funder wants it or an auditor wants it. Again, spreadsheets in Excel and no customization. So in the new way, one of the key requirements that I think of anytime I'm evaluating accounting software is, what is its reporting tool? What is its report writer like? How flexible is it? Can I produce the reports that I want to produce inside of the software instead of having to go and hack it together? And part of the hacking it together problem, of course, goes back to another recurring theme from our slides, which is when you make a change, you have to hack it together all over again. So it's very time consuming, right? So what if you have a flexible native reporting tool that can respond to your needs, and you can just edit or make a new report that's going to address new needs as they come up, as you have new funders. You know, I worked for an organization in New York City where we had a very large grant from the IKEA Foundation, and they had their own own format for the P&L. and we had to report back to them in that format. Not only did we have to report back to them in that format, but the auditors actually audited that format and not our normal format for our P&L. So it was extremely important to be able to just say, spit out the report in this language instead of me having to piece it back together. So customization should be easy and it should be considered the norm. Oh, I have one more slide, I'm sorry. Audit-Ready Financials. And then we'll get into the demo and you'll see some instead of just listening to me talk. But hopefully you're getting good information out of it. So Audit-Ready Financials, the old way of thinking is that that's the auditor's job. I know that audit people hate hearing that. And I, as a former auditor, also hated hearing that because it's not the auditor's job. And I think all of us as nonprofit accounting people understand that it's our responsibility to produce the financial statements, and it's the auditor's responsibility to just verify that they are free from material misstatement.
So how much did David Rickman pay you to say that?
This is part of my standard speech.
I like being needed.
The system, I would often say to them, so when I got on the other side of the table, even when I was on the auditor side of the table, clients just say it to me. So from both sides of the table, the quote, the system can't give you a report in that format flew around. And I said, but I'll give you a trial balance and put it together yourself. I said that when I was frustrated as a controller in my 14th hour of the day. And then I would say, there's a filing cabinet over there with all the invoices, so go pull whatever you need. I used to have clients let me go and pull whatever I needed to. And then when they asked me for a supporting schedule and it didn't match, I would say, I don't know why it doesn't match. I guess I missed an update to the spreadsheet, but it's probably because you asked me to make this adjusting journal entry and it's not on that spreadsheet yet because these things are out of sync. So the new way, system makes the auditor's job easier and they can finish their work faster, right? So you're going to have flexible reporting so that the format is going to match your needs. So if the auditors are asking you, hey, can you please give me a report that's in this format with these columns and these rows, you can produce that out of your system instead of having to take 2 hours to put it together for them by manipulating it. But you can produce a trial balance and the correct reports. Transactions are integrated and linked. So if an auditor wants to know what makes something up, you can just click the number and all the transactions that are related to it will be underneath it. So we drill down into it. And you're also going to have the attachments that support what that transaction is inside your system of records. So not only can you look at what the number is, but you can look at the supporting document for it all in one place. And depending on licensing, you may even be able to say, here, auditor, here's a login for you that's read-only, and you can go pull all of that stuff if you want to. We'll just have visibility into that.
Let me follow up on that thought. So if I'm going through an audit and I've got a revenue stream, got a revenue account of $1 million in grant revenue or whatever, they can click on that number, see the transactions that make up that $1 million for that period of time.
That's right.
And then they can also pick one for their sampling, go down and see the source document.
Right.
So as they're selecting a sample, all they got to do online is go through and look at that.
Right. Exactly, yeah. So you can attach all your supporting documents to your transaction so that when they drill down, it's all there.
Okay. Yeah. So they'll see any signatures, they'll see.
Yep.
Okay.
As well as.
Does that eliminate the requirement for paper backup? Paper copies, you see clients or people, nonprofits complete urging the paper?
For me, I went paperless as soon as I implemented Sage Intacct as a controller, but I think it's probably a discussion with your auditor, depending on whether or not they're comfortable with it. But I think it would be okay. But I no longer work on the audit side, so I can't make that call.
And ultimately, you're sure auditors for your federal programs and stuff, they're going to support.
Exactly, right. But I think it's a great use case to be able to go paperless. And I think a lot of times when you're receiving a document from a vendor, you may not be getting it in paper based in the first place, right? It's probably going to be emailed. So I think more and more people are understanding and coming around to the idea that it's fine to be paperless and the document's still there. And also you're going to have electronic full audit trail. So for things like approvals, you're going to see it was approved by this person on this day at this time. And the full audit trail is there. So the auditor can even see that happening.
Thank you.
Sure. And then of course that kind of leads back to the point of you have a single source of truth. So if the system is giving you the schedule, the system's not going to disagree with itself, I certainly hope. So when you produce a supporting schedule that comes right out of the system, you don't have to worry about the fact that, oh, I made a journal entry and now it doesn't tie, because it's just going to update.
Upload it. For me.
Okay, so now we are at the point where I'm going to give you a glance at Sage Intacct. And this is going to be basically a demo session of some of the capability that Sage Intacct can do, geared towards a lot of the things that we just talked about. It is a cloud-based ERP solution, so you can access it anytime, anywhere, from any device. I have performed some functions of it on my phone on the go when I had to do approvals or something like that. So it's fully accessible from anywhere that you have an internet connection. So let me hop over there. So this is my demo environment. This is the nonprofit for which I am an executive director, called Pumpkin Spice Awareness Corp. I founded it because I don't think that pumpkin spice gets the attention that it deserves outside of the fall season. And I think it's a travesty. So we've now created this organization to help combat that lack of awareness. So first thing you're going to see is I've been dropped onto a dashboard. So as I said, I think systems should have dashboards. I think they should be a standard part of the system, not something you should have to pay extra for. And they should give you insights that you want on demand. So these dashboards are things that you can tailor to whatever audience may be accessing them. You can have a different dashboard for your board member versus your executive director versus your AP staff. You have an unlimited number of dashboards. The particular set of dashboards that I'm on right now is actually a nonprofit specific dashboard that Sage Intacct has pre-designed. So they have created the kinds of reports that they know nonprofits need to have especially based on the changes in nonprofit accounting standards, and just publish them as part of what you get out of the box when you sign on to the software. So notice some of these things are going to look familiar from my slides when I was talking about the changes in accounting standards. So here we have a liquidity disclosure. Sounds a lot like what I said we needed when I was talking about the changes to accounting standards, because Intacct monitors those things and they update their product in accordance with the changes. It doesn't stay stale and have the old accounting standards which are no longer helpful. So here I'm seeing this first dashboard report here is a little snapshot of what are my financial assets available. In other words, my available cash. The next one, they've created a report around investment footnotes. And then they've created another report around investment footnotes. So you see how much is in my investments. And then here you see what is my investment revenue net of my related investment expenses. That's just one example. And I'm going to show you the drill down capability in a second when I get to a report that shows it really nicely. But here what I'm going to show is another report. So at the top here, I just flipped to another dashboard. I've got a little menu of the different dashboards I can have. So here I've got 958, which might sound familiar because it's our accounting standard. So at the top, I've got a CFA report. So for those of you who have federal awards, you know that CFA means Schedule of Federal Award Expenditures. And it's a report that you have to have if you spent certain amounts of federal dollars. You need to be able to report on the details of those expenditures, including all this information about the grant. So what I had when I was working with Meals on Wheels, of course, is I would have to tell my auditor, here's the agency that granted us the money. Here's the program name. Here's our CFDA ID number. Here's the award amount. And then what did we spend last year and this year? All that is right here on a report that I used to have to go dig up all that information for and then put it together in Excel. And all the details about, hey, what is any of this? I can just click this number from the dashboard. Oh my God. And I'm here in a GL detail. So in this GL detail, I can see here's all the transactions that were coded to that program. So here's my office supplies. Here's my program supplies. I bought some extra pumpkin spice seasoning for $5,000 a pop. And you can see where it came from. So here I've got bills. And you can see all the intimate details about how it was broken out. So you can see this is the fund I coded it to. So if you have fund accounting, you support fund accounting. You don't have fund accounting, you just have entities. Cool, we could do that too. Here's the department we use. Here's the customer we use. So what are all of these things that we're tagging them to? Well, in Sage Intacct, that is a concept called dimensions. So what you may be used to seeing, let me just toggle over to another screen. So what you may be used to seeing in an accounting system is you have a string chart of accounts, a segmented chart of accounts, where if you want to code something to a particular grant or GL account or department, you have to make sure that you have an account number that looks like 5000-200-100-500-2-3-4. And you have all those different segments. And then anytime you want to tag something to a different combination, you have to make that whole string again. So your chart of accounts needs to contain every unique set of ways that you could code something in a segmented chart of accounts. That means you could have 100,000 accounts easily. I had that at the chamber because on our old system, we had a segmented chart of accounts. In Intact, they have the concept of dimensions, which totally removes that requirement because each piece that you are coding to is its own unique dropdown. So you can mix and match those combinations any way you want, which makes your chart of accounts much leaner and lets you be flexible with how you record transactions. So here's how that looks in the example of recording an AP bill. So here I've got a bill for my bakery vendor. And if we scroll down to the entry section, this is where I'm capturing all the information about the transaction. So here I'm saying, I want to code this to program supplies. That's my GL account, and that's it. Because all the other details about what department does this belong to, what grant does this belong to, all of those live in these other boxes here so that I can pick them and mix and match them as I need. And I can create rules and all kinds of validation to say, you can't use this with that to make sure that people are using valid combinations. What I don't have to do is make a 5305-110-100-998-3 and then go do the same thing all over again for Department 100. So your maintenance from a chart of accounts perspective is drastically reduced. And the dimension concept is what gives you the flexibility in reporting. Because any one of these things that I'm choosing as I'm tagging transactions is reportable and filterable. So I can say, give me a report just on Department 110, or give me a report by department, spread it out and show me things that were tagged to every single department. So these are all the details that I'm entering as I code. Now, the other thing I mentioned before, that when someone drills down, they can see all this coding, and they can also see whatever I attach to it. How does that happen? That happens in this box. So here, where it says attachments, there's a couple ways you can add something. My favorite way to add something, I'm on a foreign machine, so I have to find out where the attachment is. Okay, so I'm going to stick this tax return workflow in there as an attachment. I don't know what it is, but it'll work. So if I were to want to attach this, then all I would do is I could take this document. So say it's sitting in an email as an attachment, or it's sitting on one of my folders on my computer. I just take it, drag it over here, and drop it. And it's attached to my transaction. That's the easiest way to do it. If I wanted to, I could also come in and I could say add, and I could look through a list of attachments I've already uploaded to Intact, or I can choose the file and navigate through my computer. You know, you can attach it however you want, but I love to drag and drop because it makes my life easier. So I'm going to throw an attachment on there. And then, assuming all of this is coded the way that I want it, I can post it. Now, note, another thing, as I mentioned, is we have this billable checkbox. So if you have grant billing and you need to be able to bill back to a funder, this billable checkbox is the engine through which that happens. And you can have that happen by default based on the project ID that you choose, so that if you choose project 997 instead of 998, we already know that's billable, so it'll just check. And then you have to take the act of unchecking it if you don't want it to be billable, so it helps to control against errors.
Or if you have a billable expense, you have a person out teaching a group of constituents that's expenses are funded by 4 or 5 different funding sources, some federal,
Sure.
some state. Can you divide that, split that bill up? So
Absolutely. Yep. So, and there's a couple ways you can do it actually. So there's predefined allocations. So if it's something where you say, yeah, so if you say like, you know, for this kind of expense, it's going to be split this way all the time. There's actually a button here. So I'll enter another line on this bill.
So I'll give you a good example. One of the things we do is we train teachers to better teach AP classes.
Okay. Sure.
And then you have another group coming in, that's like 25 and 5 coming in from Berea area, which costs are being reimbursed by foundation.
Okay.
So you got 3 funding sources paying for those expenses. The person teaching turns in an expense report. They've got all their costs on it for that seminar and everything. But it's one of 3 different sources.
So it's going to be broken out based on like the percentage of attendees from each.
And that person,
That's dynamic allocations, which is my.
and that person is going to have a default code. It's going to go into the Kentucky funds, which
Mhm.
is normally where they're at.
Yep.
But they're going to have 2 other expenses that are going to, or 2 other codes that are going to help fund that cost.
Sure. Yep. So we are going to talk about what's called dynamic allocations a little bit later on, and
Let's keep that.
that is how you would handle that.
Yeah,
It
okay.
also happens to be my favorite module, so I'm glad you brought that up.
Okay.
Okay. So the predefined allocation, just since we're kind of on the topic and in this box, predefined allocation is, say you have a case where you say, you know, all of our rent expense has a predefined allocation. Maybe we've got square footage that isn't going to change very much, like you know, so we can take it and we can define what is the percentage split that this is going to be. It's going to go to a certain GL account, but then beyond that, what are the dimensions it's going to be broken out to? So which department's going to cover it, which grant, which whatever you want. And all you have to do here is we define an allocation. So in this dropdown, I've created one that I call facilities. I click that, tab over. Bad example. General. I guess I didn't define that allocation. My fault. Okay, so one of these has to have an allocation defined. This was my fault for not looking. Oh, I should probably put a dollar amount in. There we go. That's the magic trick for those of you who are curious. So once you put a dollar amount in after you've chosen an allocation, Intact knows based on what I've told it previously. So we set up the allocation to say, send this percent to this department, this percent to that department. And it's taking that $5,000 that I put in and just applying that percentage breakout. So we don't have to sit there and break up a bill into 20 line items manually. We just choose that allocation and it'll break that out for you. So it'll get coded to all those different departments. You can also use that to code it to different entities, and then Intact will automatically record the intercompany AP and AR when that bill is paid. So your inter-entity reconciliation becomes drastically easier. So having done that, what I'm going to do now is I'm going to post it. Make sure I filled out all my required dimensions so it doesn't yell at me. Okay. And the minute that I post this, obviously, one thing that's going to happen is if you have an approval workflow in place, that posting is going to kick it off into that workflow. So it's going to say, now that I've submitted this bill, it has to go to this person for approval, and then maybe that's it. Or you can have a more complex structure and say, it has to go to this person for $5,000 and under, and then if it's over $5,000, it has to go to these 2 people, and of all different kinds of thresholds that you may have as use cases. So once that bill is posted, which I believe I posted that with a date of today, just want to confirm that. Yeah, I have some future posted bills as well, but here it is. So I posted that with a date of today. So a few things you can do. If you were ever to come back and view this transaction from your AP bills list, what I'm going to see is, as I mentioned, we're going to have the audit trail. So if I look at more actions and I view the audit trail, I see a full breakdown of what's happened on this transaction. So if anybody has any questions about who did this and when, it's right here. If there's any approvals that are in here, that'll also be in the audit trail. The other thing that we get that is great is I can see the attachment that's related to it. So if I click this paperclip, I guess there was no file in that attachment. That was, okay. So let me just choose a file. And I'm going to stick my PDF there. So if I click the paperclip, this is what it looks like in real life. So we get whatever I attached. So they'll come in and they'll see that, as long as you've attached a file, which I failed to do the first time. And then I'll hit done. The same concept is true when you are drilling into the report from the general ledger detail. It takes you back to that transaction, you can see the attachment, and we'll see some more examples of that as we move on. So the next thing that I want to cover is the AR and grant billing section. So let me hop over there, which is living in my project module. So if I want to send out a bill for reimbursable expenses for a grant or a funding source, in this projects module, there's a process called generate invoices. So all those things that I've been flagging as billable as I've been going about and entering my expenses are accumulating and waiting for me to bill back to my funder. So I can go into this generate invoices process and I can basically say, show me everything that's waiting out there to be billed. So I always know what I haven't billed back yet. There's a few ways I can do it. I can look at this pre-bill report. And I can see here, here's all the transactions that are going to be billed, broken out into all kinds of crazy detail. Right? In this case, there's time that's billable. There's also some expenses that are billable. You know whether it came from, where it came from. So whether it came from time entry, came from expense entry, came from AP, could have come from GL, though I don't know if I did any of those. Oh, I did. I got real creative with this. Okay, so then the other thing you can do, so obviously we know we don't always bill exactly what somebody has flagged as billable. Sometimes there's adjustments, and maybe we want to be able to adjust that on the fly as we're creating the bill. So I can go into the preview here. Tell me what to do. Okay. Let's see. I don't remember who that was for. I got to look at my pre-bill report again. Okay, so I'm going to look at Health Initiative 1. So when I go to preview everything that I need to bill to Health Initiative 1, for example, I'm going to see all the transactions, but I'm going to get the ability to say, don't bill that, don't bill that, don't bill that. So just uncheck them. And then I don't have to worry about those going out onto an invoice for the funder when I don't actually want to bill them out. And then I can go make adjustments to clean that up later, but at least I'm not billing it out and I don't have to spend time worrying about the adjustments when I just want to get the billing out.
When you're doing the billing, you're billing against the budget. Some grants have roll things up one way where another funding source might roll some up another way. May break out travel, another may have travel and general support. Can you manipulate how you do that?
Yeah, so
can you do that invoice individualized to the
right, to display it as something else? Yep, yeah, we can control that. We have the capability to, so you can create custom document templates, which allow you to have a different format kind of for each funder.
Each funder. Okay.
Right, yep, and there's also, within the dimension concept, there's a dimension called item, which is the item that is actually going to show up on the invoice. So if you tag something to a certain item, you can display that then on the invoice. Yeah.
Okay, thank you.
Sure. So that's the generate invoices functionality, and then of course the last step is you create the invoice, then it goes out, then it goes into your AR, and then you're able to send that off to the customer. You're able to email the invoices directly from here as well, so they can receive it by email. There are solutions where you can actually have an integration where the customer can pay online, and then it just kind of syncs all back to Intact. So that's something to keep in mind as well. Okay, the other thing I wanted to hit on while we're kind of talking about grants management is the process of tracking your grants, right? And tracking what you've applied for, what you've received, what you haven't received. And then when you get the notice of award, all that information that's on the notice of award that's going to eventually flow to some kind of grant reporting. So if it's a federal award, all your CFA details, for example. So if you don't have a CRM system or some kind of grants management system, you're probably tracking it in Excel. And you're tracking, here's the grants we've applied for, here's what we've won, and so forth. Well, in Intact, we've built a workflow to help you manage grants inside your system of record and keep track of whether you've received them or not. And then to be able to push all of the information that you need for your CFA reporting directly onto the grant ID so that you don't have to worry about going and gathering all of that at audit time. It's just going to be in there. And the way that we do that is in order entry. So order entry is a module that is used for kind of the quote to cash cycle. But if you think about that from a grant or a nonprofit organization perspective, what that really means is it's used from a grant application through grant award cycle. And there's no reason that it can't be applied to a nonprofit. This is where it kind of reinforces the concept from that quote, where an accounting software should understand how to be able to be customized for a nonprofit.
I'm going to pause Jim for a second and brag on him a little bit. So the functionality said we created. So this is not necessarily something that was out of the box with Intact, but because of the flexibility that the system offers, Jim was able to take these concepts and without being a programmer or a heavily technical person, able to configure the system to do some of the stuff that he would have had to do manually in other systems or without it. So there's a lot of configuration options that you can do with it. And so some of the stuff he's pointing out here are custom fields that he added without having to be a programmer or a developer. So as he goes through that, just think about, you have endless possibilities at that point because you can track information that they might not have thought you needed to track.
Right. Yep. And unlike, there's some other softwares in the space where the customization is code and programming, and that's going to require some IT consulting to pull off. Intact is based on and has always been based on configuration choices, as Jason said. So these are things that are being done through configuration, done through drop-down menus and clicking next in a wizard. It's definitely nothing that's heavily scientific or difficult. So this process that we designed for the grant tracking workflow starts in order entry, and it basically follows, if you look at this graphic here, it's going to follow these lines. So we're going to start with the sales quote, which is going to be our grant application. Then there's going to be an order, which is our notice of award, and then eventually we'll invoice it out. So when I create a quote, I'm going to go into my list of quotes here, and I'm going to go to my grant application. And I have one that I put in here. And again, I just want to show an entry screen to show you that at any point, you're capturing all that dimensional information, right? So that's going to come forward in the revenue as that revenue is earned or recognized or as you bill it out. All those dimensions are going to be there because you already entered them all the way back when you created the grant application here. So what I did is I created, and this is where the concept of the item dimension can come into play, right? I've got a foundation award. And then I'm saying this is going to be a $150,000 grant that we're applying for. And here's all the particulars about what it's for. So it's for the general fund. It's going to be hopefully unrestricted. And it's tagged to this project ID that we have to house the grant. So all of those things mean that when we want to run a report by grant, it's going to be really easy to do because we're tagging it to that ID. So once I've submitted that grant application, all I have to do really is post this. And this is where the workflow becomes really fun. So now that we've got a grant application in the system, notice this convert button shows up. So when we receive a yes or no from the potential funder, we can convert it and we can say, change this into an application rejection or change this into a notification of award. So let's be optimistic and say that it's a notification of award. So we'll just click that. And now, notice in the top, there's CFA details. Those weren't there before. Those are fields that I added to this document because this is the point where I know I'm going to have that information, and I want to capture it when it's in front of me, rather than having to go look back at it at the audit and I have no idea where the grant agreement is and have to wait for development to get back to me. So I can then...
Could you use something like this to integrate like your pledge receivables and like document your pledge payments as they're coming in?
Absolutely, yeah. So you could have, when somebody pledges money, you could record that, and then as you receive payments against it, it's just, yeah, simple.
Instead of having to track.
Exactly, yeah. That's kind of a classic use of this module. Yeah.
What's the due date and how did that get in there?
So this due date is based on these terms, right? So I'm saying, when I issue an invoice for this, I want it to have net 30 terms. So then I'm going to say, due date is that. You can also change the due date to whatever you want.
You could use the term of the grant.
Right, absolutely.
The 3-year grants you can put from this date to this date.
Right. Yep. So then, all the details are in here about the grant. And then if I want to capture my SEPA details, I'm going to show you something before I do that. So before I do that, let's take a look at the project ID I set up to track this grant. So when I recorded this application, I tagged it to the project ID that I created to keep track of that application. And if we look at how I set that up, this is going to be just a preview of what the screen looks like to create a project or grant. I put some information in that I knew about it at the time that I applied. I gave it an ID, I tagged the customer that I'm applying to. And then if I look at the additional information tab, down on the bottom, and again, this is custom fields that I added through a drag and drop, drop-down menu wizard. Here's a whole section for my SEPA details. So when I know those details, they're going to go here, and then I can pull those onto a report so that I'm not having to look for it later. But what if I could make it even easier? What if I could enter them all here and just have them populate on the project? Then I don't have to go and re-enter all that stuff on the project or go to a separate entry screen. So that's exactly what I'm going to do. I'm going to go to my SEPA details tab. I'm going to put in a CFDA number. This is not a real CFDA number, so I apologize to whatever program that is. This is going to be Department of Agriculture, obviously. And payer is going to be federal, and I'll give it some other ID, maybe like a state ID. And what kind of assistance do they provide? Cash. So with all that filled out, I'm going to post. And then I'm going to try to exercise some patience because it always goes slower than I do because I have had 4.5 coffees. But if I click this, and I go back to my additional info section, didn't catch up to me yet. So let me reload this page. In real life, you're probably not going to do this and be as impatient as I am, but hey, look, all those details are there, right? So what that means for your end user is they might not even know or need to know that this is happening, but when they enter all that information, the SEPA information, and they capture the notice of award, it's going to get pushed here without anyone having to do anything. And that's just because of the workflow that we have.
You could have also attached a copy of the award letter right there as well.
Absolutely, yeah. So,
Filing cabinet.
yep. So here, as we saw with the AP bill, pretty much every entry screen is going to have this drop-down menu for attachments. So when you receive that notice of award, you can attach it here. You can attach it on the project record. You can attach it anywhere you want. You can actually just upload it as a file in your Intact system and save it in there as well. You have unlimited cloud storage available in Intact, so you can use it like a Dropbox for your accounting team, right? And just store all your files in there. You don't have to worry about running into any limits because there is no limit on cloud storage in Intact. So we've covered grant workflow, covered grant billing, covered AP. Next thing I want to show you is the allocations functionality, the dynamic allocations functionality. So dynamic allocations is used for when you have those allocations that you don't know up front. So the kind of situation where you were talking about where it's going to be based on the number of people that attend from each source. And you have to go back and calculate that after the fact because when you get the bill, you might not know at the same time. Or maybe you're allocating based on how many hours people spent in each program. So you need to allocate their cost based on the hours. You may not know those both at the same time, or you may not want to go and allocate it at the time of entry. So what dynamic allocations does is it looks back at the transactions you've entered, and it looks at the basis for those transactions, and it reallocates your cost for you. So if you want to send overhead, for example, to Send your overhead expenses to each program based on its overall share of your organization's revenue. That's a pretty common one that I've seen. You can do that because Intact is going to look at what each section's revenue is and allocate out those expenses. So what I have here is an example of a financial report inside Intact. And this is a statement of revenues and expenditures that is broken out by department. So across these columns, we've got all our different departments. But what you also see is a column here that says pre-allocation, a column here that shows you the impact of the allocations, and then a column here that shows you after allocations. So you can see a before and after view of what your financials were, which is really useful when you're communicating with program directors and they're trying to get more insight into the overhead. You can say, well, really you're complaining about $2,000 or something like that. So you have the ability to drill into that kind of information. So you can see here, when an allocation is made, it shows up in a separate column. You can also stack it on top of, right? So here, this gives us a grand total. But when I look at the detail for that allocation, so if I'm going to click it, make use of the drill down, what I see is here's all the allocated entries that Intact did for me. So this is a GL detail of all the different allocations. Notice it's carrying with it whatever dimensions I wanted it to carry with it. So I'm going to know this is allocated, but I'm also going to know it's for this vendor. So I can see to like the vendor level what I'm allocating. And then if I click inside a number further, this is going to eventually, I'm going to get back to the basis for how the allocation was created. So this here is the actual journal entry that Intact created, the full thing. So you can see the full set of debits and credits. Now, if I click this description line, I'm taken to what is called an automated allocation snapshot. So this is every detail about what was my logic behind that allocation, so that if somebody needs to audit and make sure that my allocation basis is reasonable and consistent, here's your answer to reasonable and consistent, because this is documented as a snapshot in time. It shows you exactly what the methodology was, and it shows you you're able to choose, and obviously all this is configured, but you choose, what am I allocating? So an allocation focus means what am I hoping to change as a result of the allocation? So here I'm going to say, I want to allocate this out to the different departments. In your case, it would probably be projects or grants, right? So you allocate it out, and then
Attach a document to that too.
you can attach a document to this as well. Yep. So up here, there's an attachment section. I didn't happen to attach anything to it, but you have the attachment capability there. Then here, preserve value means when Intact books the journal entry to do the allocation, what dimensions do I want to carry forward? So how much detail do I need in my ultimate allocated entry? Do I want to know I'm allocating just this account balance, or do I want to know I'm allocating this account balance for this vendor, for this location, for this project? You can have all that level of detail inside your journal entry. So rather than it just being a movement of numbers between accounts with no dimensions, it's going to show you all the dimensionality of whatever transactions were booked, which can be helpful because then you know, oh, that vendor, that allocation is so high because we had a huge bill for that vendor or something like that. And then here in the next section, your source pool. So you define the source pool is the what. So source pool is what do I want to allocate? So in this example, I was allocating out my occupancy costs based on something. So here I'm saying, take the occupancy for the current month and allocate 100% of it out based on my next section, which is basis, square footage occupied. So one of the really unique concepts about Intact is on top of having straight general ledger accounts, you also have what's called a statistical account. So you can capture and report on non-financial data, which can then be used as a basis for your allocation. So in your case, that's how we accomplish that program allocation for the participants, because we're going to have a statistical account where we say this many came to there from this place and so forth. Here we have, we're recording each program's share of square footage for the building as a statistical account. And then Intact is going to say, here's its pro rata share of square footage. Therefore, this is their share of occupancy costs, and use that to calculate the allocation. Now, the beauty of that is as these statistical numbers change, Intact is looking at them. So as you update the square footage occupied, going forward, your allocation will just change without you having to do anything. If you want to go back and reallocate something, you just rerun the allocation. And then in your target entry, you're telling it, debit this account, credit this account. So there's a lot of schools of thought on what an allocation looks like. Sometimes people have a single line at the bottom of a statement that'll say something like allocated expenses. Sometimes people want to be more granular and have the allocation on the actual line level. Right? You can accomplish either way. So with all of that defined, that's what gets you back to, if I get out of my layers of drill down here, this kind of report where you get the before and after, and ultimately you get the impact. And actually, I shouldn't have backed out of that because I wanted to show you further backup you can get. So when you're looking at this snapshot, one thing that I glossed over, which I should totally not have, is on the source pool. But if you want to know, hey, what did you pull for the source pool when you ran this allocation? Well, if I click see source pool calculation, notice it just downloaded a file. This file is going to show me exactly what it found when it ran that allocation. So that there's no question as to what I was using. So when it pulled the balance for occupancy expenses, it was GL account 5502, and this is what it found before the allocations were run. This is how it was split out between all these dimensions with all these different dollar amounts. So this is very easily auditable because it just returns exactly what it found and can be easily recomputed by an auditor. Same thing for the basis, right? If I want to look at what did you find for the basis, I just click see basis calculation and it's going to return to me. Here's what the square footage was for each program. And then if I want to say, show me the percentages that were applied to come up with all these journal entry amounts, if I click see dynamic split calculation, it literally shows me by whatever dimension. So in this case, department is the important one. Here's the percentage of the expense that each of these received. And of course, it's going to add up to 100. So the last thing I want to touch on is a few more dashboards. So I mentioned the nonprofit board book, and I want to show you that in real action. So the nonprofit board book, again, was developed in partnership with GuideStar. And it was developed by talking to GuideStar about what people want to know when they go to visit somebody's GuideStar profile, and then creating reports that are tailored to that kind of audience. So what this has is 3 different dashboards actually inside of kind of a container that you get when you subscribe to the digital board book. And it's going to give you these pre-built reports on things like expenses, on things like a concentration of revenue, essentially. So how much of, what percentage of my overall revenue is each of these sources, which can be important to know where your risks might lie. What's your profitability, of course? What's my composition of all my different investments and assets? And what is my liquidity looking like? You know, how many months of cash do I have, and so forth. You'll also see, there's actually the personnel expenses. By the way, I want to drill into this just to show you the drill down again. So if I drill into the personnel expenses here, it's loading. Okay, let's try that again. Wait for that to load in the background and move on. So the other thing that you get is pre-built graphs. So these are some of the ones that were like the ones that I showed on my slides. And as with your GL details, you can also drill into the graphs. So if you click the graph, you can see here's all the accounts that make up that number. And then because everything that's blue has drill down, you can drill into those numbers and get to a GL detail, which there's nothing in here, so that's a big deal. But you know, if there's transactions in there, you're going to see them. Then you've got your liquidity composition, your net asset composition, your liabilities as a percent of assets, and then charting your liquidity, which can be important. All of this is really good for a non-financial audience, right? Because they like to look at pictures. Mm-hmm. And then the kinds of questions that, based on discussions with GuideStar, we think you should be thinking about and discussing. So you can drill into this, and if you don't know what any of it means, you can always click it and it'll come up with kind of star guidance on where you find that information. And then lastly, but not least, your income statement or statement of activities graph. So again, this is charting what were my personnel costs, my major expense categories, how are they charting and trending, full costs, revenue composition, contributed versus earned revenue, my unrestricted surplus or deficit, all those kinds of things. And these are all just pre-built. So it's a humongous time saver to just be able to kind of flip it on and have this kind of insight. And it'll probably blow a lot of people away because like it's not something that you see every day for sure. But I do want to get back to that one so I can show you a drill down, which is my favorite. So if I look at this temporarily restricted net assets, one thing that I used to do a lot in preparing for the auditors to come in was I would have to prepare a schedule of the movements in my temporarily restricted net assets. So I would need to show them, here's my beginning balance in unrestricted, here's what was released, here's what was added, and here's my end. And that used to take me a really long time because I'd have to go and manually create all these kinds of entries to release revenue from restriction. And none of that level of detail was tracked in my accounting software. Well, if I now click temporarily restricted net assets here, this opens up a report that does that for me. So now I've got my beginning temporarily restricted net assets. I've got the revenues that were added to temporarily restricted net assets, and I have any release that I recorded from my temporarily restricted net assets, and an ending balance. And it's in my system of records, so guess what? It matches my financial statements. And of course, really belaboring the point, but I can drill down again. And I can get to the underlying transaction and any attachments that may be living on it and a full audit trail of those transactions. Okay. And then one more thing. So you mentioned, for example, reporting in kind of different languages for different grants. So Intact has a concept, which I think is one of my favorite little sleeper features of it, which is called the reporting chart of accounts. And the reporting chart of accounts, part of the core product, what it allows you to do is change your account labels based on which audience you're reporting to. So I had to do this with IKEA. This is actually how I accomplished my IKEA example, is I could say, so I'm running a trial balance right now. So say I want to run it at 12/31/18, and I'm not going to do anything with my reporting account labels up here. So I'm going to say, show me my current month trial balance for 12/31/18. And it's going to show me this, which is, there's nothing earth-shattering. This is my standard trial balance, my accounts, my opening balances, debits, and credits in the end. This is a normal, as if there is a thing, trial balance. Now, if I want to change this and say, well, you know what? I would rather report under the language of this grant because they require me to roll up all these accounts into, 2 categories. Well, I can check this box, substitute with reporting account labels, and I can have as many sets as I want. So I can say, oh, I have this audited grant, and I want to give them a trial balance, rolling things up the way that they want to see them. Well, if I do that and I hit view, first thing you see is all these things with stars. That means that they're unmapped. Because what I'm doing is I'm mapping my chart of accounts to the grant chart of accounts. But if I get down to the bottom here, see these 3 lines? So these are all my P&L lines. Right? I didn't map the balance sheet because I didn't care. I did that on purpose. But usually it's the P&L. They want to know what you spent. So I mapped all of my different expenses into the 3 categories that the grant gives me, either direct, other, or travel. Maybe in some cases, that's all they give you. In other cases, it's just this really complicated mapping. But you can accomplish either one using the reporting chart of accounts. And you can just go about coding things the way that you always code them, and Intact will report this way for you. So if I drill into this, I see all the transactions that were recorded to any account that's mapped to that. So now I've got salary, I've got office supplies, I've got whatever belongs in there is just mapping. And say I wanted to fix or change something, this is no coding. This is no like extreme magic or anything. All I have to do is I go to my general ledger and I can access here my reporting accounts. So all it really is coming over to my reporting accounts and saying, show me the reporting accounts for my audited grant, of which I have 3. and I can edit this account. And I can identify what is mapped. So here's how I'm accomplishing that. So if I needed to move something, I just take it out and put it somewhere else.
So if you had 15 different funding sources, 15 different budgets, you'd have 15 different reporting maps.
Absolutely. Yeah, you could have one for every single one.
Probably would be tied to each individual fund. You're going to trial balance in that fund, and roll it up just like.
Right. Yeah. So you can choose that at runtime, which is the great thing because then you're not married to anything.
Right.
And there's another view of this, which I really like, which makes it even clearer. So if I go to, I think it's here on the audited grant. Yep, so when I look at this is even better actually. So this is going to show me my natural GL accounts and then whether or not it's mapped. And then if it's not mapped and I want to map it, I can just come in and map line by line. There's also, for Intact, there's import templates for virtually everything you can do. So you don't have to come in here and key these in. There's a pre-built Excel import template for everything that you need to get into the system. You just pop it in there, import it, and this mapping will be there for you. Same thing is true of journal entries, same thing is true of AP bills, AR invoices, employee expenses, pretty much anything you can think of. So, you know, Intact does have an open API, which is one of its biggest benefits, which means it can integrate with pretty much anything else that has an open API. So if you do have solutions like a bill.com, like Tally, like Sonia, Salesforce, all those kinds of solutions have integrations built with Intact, and over 200 solutions have integrations built with Intact. But if you come across one that does not have an integration built with Intact, or if you just think it's, you know, not worth the money, or it's not the right time for you to do an integration, if you can get an export out of your other system, put it in an Intact import template and pull it in. That's all you have to do. It's going to save you all the rekeying that you would otherwise have to do. A lot of people will do that for payroll. Like they'll get a, you know, in payroll, their payroll providers, a lot of them have a GL export file, and you can work with a lot of these providers so that they put it out in the right format and you can just import it to Intact. That's what I used to do for payroll. I was trying to, I've also done it with ADP payments. Both of which have integrations as well if you did want to go that route. So that concludes my demo. How much more time do we have?
About 15 to 30 minutes.
Okay, because we have the rest of the slides, and then I figured we could do questions.
Real quick, while you're in here, we're talking about KPIs. Did you focus on the performance?
Yep, let me pull that up. Yep, that was on the board member dashboard that I trotted over. Okay, so here is, so we mentioned KPIs, and one way to represent that obviously is some of the graphs that I had showed you. But another way you can represent KPIs is through these, which are called scorecards, which is what you see across the top of your dashboard. So these are things that are taking, in most cases, they're going to take your financial and your non-financial data that you're storing in statistical accounts and use them together to do these kinds of calculations for you and marry that data. That's how you get your unit metrics that are so increasingly important to a lot of people making funding decisions. So here I've got, for instance, my clients served, and I'm comparing that against prior year and seeing, oh, great, I served 1,600 more clients this year than last year. I've also got a calculation, so I've got some calculation of program efficiency. It's telling me what that is. It's telling me what my fundraising expenses percentage is, my admin expenses percentages. That one is usually really important for a lot of nonprofits because some funders are very critical of that percentage. And then fundraising efficiency. So this example is geared towards kind of a board member, but you can also see an example which is geared towards more of a program person and also could be interesting for a finance person who is helping a program person or dedicated to their program. So if I look at my sample NFP metrics, for example, now I'm seeing kinds of unit metrics that I was referencing before. So here's my clients served, here's my meals served. Obviously, this is a Meals on Wheels example. What is my cost per meal? My cost per meal is critically important in a Meals on Wheels situation because my federal reimbursement is limited to whatever they've approved in the contract. So if my cost per meal skyrockets, I better find some other way to cover that because they're not going to help me out. And also some of my state reimbursements are probably going to be insufficient to begin with. So we have to really manage that cost per meal. Same thing for for like a, per diem kind of staff that's delivering services, you need to be able to weigh their cost per hour versus what you're getting reimbursed for that and make sure you have some way to cover any gap. So knowing those kinds of metrics is really important. And the fact that your financial data and your non-financial data are married in this system is going to give you insight like that to what are those metrics. And you can also budget what should they be, and your scorecard can indicate, red arrow down if it's bad, green arrow up if it's good. Compare it against budget, compare it against prior periods. And then you have that kind of information to weigh against your peers and know that, because it could be a case where you're bleeding money, but everybody else is too, and that's just a reality of operating the kind of program you operate. Or it could be a case where you are way out of line with the industry. And having these kinds of scorecards lets you know that. And by the way, the volunteer hours is a nice one because that's part of the disclosure on 990. So it's a little bonus there. Then of course we have here like our program costs. We have statement of functional expenses that are pre-built. Here we've got a graph of things like how many clients did we serve in each program. What is our volunteer effort by program area? And then here for certain sites, how many meals did we serve? It's a really powerful native KPI capability that's it can really change the kinds of discussions that you're able to have with your program people.
With the system, you can have view-only access for
Right.
Executives or program managers, so that you don't have to worry about them getting anything that they've got real-time access to it versus begging you to send them reports all the time.
Right. Yeah, it was one of my favorite parts about it is the ability to shift those program managers and most executives to self-serving for their inquiries, because they can go in and look at this in view only, can't change anything, but they can drill down and look at in the same way that an auditor could. So it can help to eliminate what's in this GL account kind of questions, because we shouldn't have to spend our time answering that. Okay, so I'm going to show a few more slides, just kind of talking about some other clients who have implemented Sage Intacct and what they've gotten out of it. And then after that, I'll open it up for some questions. I'm also going to have a bunch of my cards here, which I'll leave on the table. I'm always happy to talk with you about any other follow-up questions you might think of. So let me get back into my slide. Customer success. So I think we have 4 examples here, and one of them is a video, which is a really good video. So this first example is a church. It's called Sandals Church. Where is it? I have no idea. But they're a church that implemented Sage Intacct. They use something called Logos accounting. And obviously their chart of accounts for 3 campuses was difficult. They probably had a segmented chart of accounts, which made it a nightmare. They had a 45-day monthly close, and consequently, it was really hard to make budgetary decisions, because when the actuals are that far behind, you don't know that you're blowing the budget yet. So with Sage Intacct, they cut their monthly close from 45 days to 10, increased their accounting productivity 20%. They grew donations by 25% and 30% growth in attendance. All of this was probably because you're able to spend less time in all of these kind of mundane activities and actually start thinking about value-added analyses, which can help contribute to how do we grow the programs, how do we further the mission. That monthly close acceleration is a 450% acceleration. And the director of finance, the value that she saw from it was the executives knew where they stood financially, which before they were kind of in the dark. And they've been really valuable, obviously, in helping them support their growth and their mission, which is evident in their increase in donations and their attendance. The next one is Seattle Indian Health Board, which is obviously based in Seattle. They were using Abila MIP, which had its time in place and is now not very good anymore. I used to use it, that's why I can say that. And it was hard to get data out of the system. It was not flexible or transparent, and it does not scale well as your companies grow. When they moved to Sage Intacct, their finance team efficiency went up by 50%. They shaved a week off their month-end close. They scaled when they had 30 grants. Now they have 85, and they scaled just fine using Sage Intacct. And they had 45 users who are able to log in as view-only users and look at dashboards. So all of their different program staff or grant managers or whatever it may be were able to log in and look at dashboards that were specific to them, see only what they needed to see, but have access into those real-time insights so that they could make decisions about their program and evaluate how their program was doing. So it's a 65% faster monthly close. Their CFO said that the ability to drill down from the dashboards was a huge time saver. Obviously, I mean, I think we can all imagine how that decreases the amount of time you have to spend responding to inquiries. It gives them the flexibility to add new dimensions if you need to capture another data point, instead of adding 10,000 accounts for all the unique combinations you would need to accommodate. And it made Intact stand out very, very well as compared to NetSuite.
You talked a little bit about the difference in the user classes, and the area I'm particularly interested in is the structure, have transactions, it's transactions, or travel, meal, to be able to.
Yeah, so for people that need to submit an expense report, the employee user class, which is like the view-only class, is actually able to also submit expense reports. So provided that you're using the time and expenses module within Sage Intact, they can submit expense reports. What a lot of people also do is they use something like Nexonia or Expensify, which has an integration already with Sage Intact. So people can just kind of bring that along with them if they're already using it. And it'll integrate with Sage Intact. It'll pull all your chart of accounts, pull all your dimension values, so it'll all be updated in real time. And they can take pictures of their receipts, and all that syncs over along with the expense reports to Intact. So Intact becomes your super powerful financial reporting engine, but people just use Expensify on their phone, and that works just fine too. But you have the option, the flexibility with Intact to do it either way. You can either use something like Expensify or Nexonia, or you can give them logins to Intact and have them submit direct through Intact. And both ways are totally possible.
So the reason you would use an Expensify or something like that functionality?
Yeah, I think the mobile interface is a big reason why people usually do that, and also because a lot of people are already using something like that when they come to Intact. So what we see a lot is people are bringing it along with them, so they don't have to change that on 100 different people who are used to using it.
So the mobile interface, you wouldn't have that with Intact, but you would have it with.
You have a mobile interface, but Expensify is what we would recommend. So Intact's approach is they consider themselves a best-in-class cloud financial solution. And what they believe is we're going to do what we do best, and we're going to do it better than anyone else. But for all these other solutions, we're going to let people pick and choose the other best-in-class applications and just integrate them in. So that's why we have an open API, because we believe if there's all these best-in-class solutions that are out there already, we're not going to spend our energy necessarily competing with them. We're going to let people bring those to the table and make it very easy for them to integrate. And we're going to give you reporting and accounting core accounting functionality better than anyone else. Sure. Meals on Wheels. This actually is not the Meals on Wheels that I worked for. So I worked for an organization that did Meals on Wheels. This is Meals on Wheels of America, which is the national organization for Meals on Wheels. So significantly larger even than what I was dealing with, and I was dealing with a pretty large program. So the Meals on Wheels challenges were limited grant management capabilities, manual processes, no reporting functionality or lack of reporting functionality. They came from QuickBooks, so a lot of you may know that pain, and manual expense and travel accounting. So with Intact, again, they shaved a week off their month-end close. They grew 20%, as is very common for programs that are dealing with the elderly, because the elderly population is enormous, and it's all across America, that population is growing exponentially, and programs that serve them have to deal with the growth and the services that they need to provide. And they were able to avoid the cost of a full-time employee. So they had it in the budget, but then they didn't need it because they had Sage Intact and all the automation that it could contribute. They sped their departmental planning process by 4 times. So, and they also cut their audit prep time by 60%, and they had calculated that within 2 months the software had paid for itself. This gentleman, Don Miller, is actually a current client of as well. for a different organization. He spoke at our rally event. And for him, he said the best things about Intact were that it was easy and powerful, cost-effective, and had really flexible reporting. He was coming from a lot of reporting pains because he was using QuickBooks and he had to export things and do all the things that many of you are probably familiar with. It gave them the information they needed to manage their business effectively. And because they could, they were able to scale and handle that kind of growth that's going on in the population that they're serving. So the next one, this is a really good video for an organization called Room to Read, which is also a Sage Intacct client. So I'm going to toggle over to that. I'm going to stop talking for the first time in a while and let you listen to them talk.
Room to Read envisions a world in which all children can pursue a quality education that prepares them to be fulfilled and makes positive change in the world. Hi, I'm Sherry Friedman, and I'm the Chief Financial Officer here at Room to Read. And because I have a team in India, I wake up very early, around 5 in the morning. I really try to give them a couple of hours. I have to get my daughter off to school, and then we have our 2 dogs, Sky and Caviar, who we recently adopted. I think the finance organization plays a huge role in achieving our mission. It took us a couple of years to sort of get to a place where the different parts of the organization are completely aligned around our mission.
There are 750 million people in the world today who can't read and write. 2/3 of them are women and girls. And Room to Read believes that this is a reality that we have to change.
Having the Sage Intacct books has really made a difference for us in our organizations. We complete our audits in a very timely way. Things like Nexonia for our time and expense and our timekeeping. They integrate fully into Sage Intacct, and the organization is now more efficient and effective at producing reports. When we did the analysis, we came up with a 400% return, and being able to really be more transparent. I mean, we were always transparent, but being more transparent, being able to tell our story in ways that donors are really interested in seeing it. What we would do with the money if we had it, and how are we doing with the money that we have.
Because of the work that we've done with Sage Intacct, we can now focus on our people and our processes, ensuring that our staff are supported to do the good work that we've been hired to do.
I've always been engaged in some form of service, and I wanted to figure out how I could go one step further. For me, I was a single woman and I wanted to be a parent, and I thought there are so many children in the world. So the international adoption process for me worked really well and aligned with who I was and who I am in terms of wanting to add to one child's life. When Rachel travels to these countries, she's really moved. You know, Rachel's education is part of my passion, and ensuring that she herself is a lifelong reader.
Not only is she doing something that she's really good at, but she's also helping a bunch of kids get an education. She's willing to help as many people as she can, and she's the greatest person in my life.
When I think about what Sage Intacct has been able to do for us, it's helping us contribute to utilization of our resources in a more effective way. The amount of savings we've put into the organization, the resulting number of children that got impacted by that was a little over 100,000 kids. But the truth is that you really begin to push your own organization. And the thing that I loved about Sage Intacct was that they have this customer for life philosophy. They're right there with you.
That was, for Room to Read. And one thing that they mentioned that was really good that I'm glad I caught from that is Sage Intacct has the capability beyond just operating domestically. So if you have to work internationally, whether that means that you have vendors or customers in other countries and you need to work in different currencies, or if you actually have entities in other countries and you need to be able to report across multiple different currencies, all that functionality is there. So we can transact in multiple currencies. We can consolidate entities that are in different base currencies into USD or into whatever we need. So it's able to scale not only domestically, but also internationally.
I think another thing that she pointed out there that I don't think we hit on was the customer for life concept. And one of the ways they do that is through the updates. And I've been very impressed with that, being in software for 20 years. They do 4 releases a year. So they schedule those at the beginning of the year. On this Friday of first quarter, this Friday of the second quarter, or fourth quarter, when the update's going to happen. It happens, and you come in and you've got new functionality 4 times a year. And it's not just focused on bug fixes, they're adding new functionality 4 times a year. Their chief technology officer is heavily focused on what's coming future of us, and I've spoken about this in some of the other sessions that we've done throughout the firm, but artificial intelligence and what we can gain from that. So in this last quarterly release, it's in a preview mode, so it's not pushed out to everybody, but you can have access to it if you want. They've got their first AI-enabled functionality called GL outliers. So you can put rules in place looking for anomalies in journal entries that will alert people of things that fall outside of certain parameters. And that's just the first step of where they're headed with some of that. And so it's been refreshing. You're not having to schedule, 2 days of downtime because you're going to get an update, or your server's out of date and you can't get the update, so you got to buy a new server. You get 4 updates a year and you're always current. There's no more of calling in about something and asking what version are you on and saying, well, if you're on the latest version, you could have this. Everybody's on the latest version all the time. So that's been a really interesting change in the way we historically have thought about things.
All these updates that you get each year, how many times or how frequent is it to change the formats? So you have a dashboard, you have certain ways that you navigate through the software.
Change.
Those don't change. Your view doesn't. Your day-to-day interaction doesn't change.
In my time with Sage Intacct, they did do a user interface change, and they did a soft rollout of that because that could freak out users.
Right.
And so they put it in there, and you had to turn it on for almost a year.
Okay.
And you had a little toggle button, and I think, Jim, the old one is still there.
It's still there. 5 years ago, they rolled that out, and they still let you default back to the old one.
So big things like that could impact people, they allow you to opt in and opt out for a period of time until you get ready for it. But the updates that they do don't impact your reports. They don't have any impact on those custom fields that Jim talked about adding, and they don't have any impact on your integration. So I used to do software development for a large international software company, and they made their money on customizations. So you might buy the system for $500,000 and you pay $1 million for customizations to make it work for you. And then you were off on this island. So when we released an update to the base system, you couldn't have it because you got to pay another $1 million for them to redo your customizations. Mm-hmm. And so a lot of people ran towards solutions that have everything in one, because if you have 2 systems talking, vendor A does an update, breaks your integration, and you have to wait for vendor B to catch up. With the world of the API, that goes away. And Intacct guarantees that their API interface to let data come into their system from other systems works 12 years backwards. I actually think the original API from 20 years ago still works, but legal won't let them say that. But 12 years, if I wrote for my software to go into Sage Intacct 12 years ago, that still works even after all those quarterly releases. They make that the fundamental commitment to be the best in breed of the core financial. They have to make sure that other systems feeding data in aren't impacted when they do those updates. And we saw that to be true. On average, most clients have at least 3 third-party integrations into Sage Intacct. So AP workflow, employee expense reimbursement, payroll, all those. But Jim mentioned 200. I think it may be close to 400. If you go out to their Sage Intacct marketplace, you can search to see all the different software that has integrations into that out of the box without doing anything custom. So you subscribe to both. You do the configuration to marry your Intacct up with your bill.com, usually within less than an hour. You have the 2 talking together. You generate a bill in bill.com, it shows up in Sage Intacct the same as if somebody keyed it in there. So that has been a really impressive component, especially coming from a world of customizations that become a nightmare. You really have a lot of long-term. What other questions do we have for Jim on anything he talked about, whether it be the accounting standards or anything else in the system? Jenny, do we have anything from our WebEx visitors? This is an easy group. Surely somebody's got some questions for Jim. I know when we did this in Charlotte, they wore him out.
So I have a software that I came from another institution. I had them ready to go on the changes, but I'm in another institution. So my biggest thing with software that I have right now is I almost have to train whenever I call support. I'm training them to be accounting minds, so they're not used to that. And right now my chart of accounts is a mess. It's not getting, we have to move things over to Excel just to get good reports out. So my question is I'm a 6/30 year end. So do I look into Sage, see if I can't get it up and running with a new chart of accounts? Because my vendor that I have right now, project manager that I talked to, he said, well, you may have just to turn off gap reporting. And that, of course, for me went red alarm, red alarm, red alarm. So I'm like, no, we're going to have to figure out a way. Well, it'll probably be another workaround, which will be more time on me. So is it doable to get that done that quickly?
Are you thinking like by 7/1?
Yes.
Yeah.
Okay. With how much?
If you started sending.
If you start,
Yes.
so, like the caveat to that would be like from April to July, yes. From June to July, no. From May to July, how much time do you have to commit to the project? So the answer is depending on when you start the work, but it's still doable. I mean, at this juncture.
Okay.
And you can go live any month of the year. And actually, Jim will tell you he can take people live in the middle of the month. It freaks accountants out, so everybody calm down.
I know.
Calm down. But
I've done it several times.
he has taken people live in the middle of the month and not skipped a beat.
Oh, really?
Because it's just you stop processing one day in your old system and you pick up an intact. That's
Okay.
really all there is to it. And so there's a historical data load component, right?
That's what I was
It's
going to
always
ask.
taxing, but
You're going to do that no matter.
right, you have to do the historical data no matter what. So
We don't do it often, but
Right.
but you can. There's no magic.
I want to, and they're wanting to move me to a new database to go to this new chart of accounts that I'm saying, the one that told me to turn off gap reporting.
You're going to re-implement in your.
Yeah, I have to re-implement, and then they weren't going to bring any historical over.
And so one other point that you touched on is having to explain the accounting to people that you're working with. So I think that's a benefit is that we have a team of people who are, for the most part, all accountants. Obviously, I'm a CPA. There's several other people on our software consulting team who have experience actually working in accounting.
We have buildings full of CPAs.
Right,
also.
in our entire firm.
But Impact was actually developed for accountants by accountants too. So it was developed from ground up, a cloud solution, and the team that originally the accountants designed it versus a bunch of technology people.
Right.
Okay.
And I think you can see from some of the samples that we showed, they understand nonprofit accounting very well.
Yes, they
So,
do. Okay, thank you.
sure.
Jim, just take a question for you. Just take your advice from a generic nonprofit. Sage. I go into system conversions, basically. Nothing like going through Sage.
So what we do is we develop, so we separate our project into 5 phases. And it's plan, define, build, model, and deploy. That's our 5-step approach to implementing the software. The planning phase is when we're going to be talking about what you decided to purchase, talking about your configuration options that you're going to need, what you're hoping to get out of the system, doing a really thorough scoping and understanding of what we want to achieve during that project. Then in Define, we're going to go deeper into your business processes and help to map out, here are your requirements, here are your processes, here's how we're going to solve for them in this project. And at the end of that Define process, we produce what's called a solution definition document. So what that document does is literally details all of your requirements, and right next to it in the next column explains how we're going to solve for them for you.
That's your deliverable.
That's our deliverables, right? And then in our after define, we get to build, which is when once you've approved, like we agree, this is what we want to build. Then we build it out, right, and create it. Then after and during that, right, pretty much throughout this whole process, you can think of historical data happening, right? You're taking it out of your old system, mapping it into import templates, pulling it in. Build is when we're doing all the configuration, designing any kind of custom things that we may have identified that we were going to do with you. And then once we've completed build, we move into model. Model is super critical because it's when you take everything we've done and you test it and you try to break it. And you will hopefully find that you can't break it. And if you do, it's intended to be a collaborative process. So it's like, oh, well, we decided to do it this way and that's not what we said before. So we'll solve for that during the model phase. And then deploy is the shortest phase of them all. It's when you get your remaining historical data kind of stragglers in. It's when you complete your first bank rec. It's when you check over your financials, first close, all that kind of stuff. And then ultimately after that, so at the very end of deploy, we transition you to support, which is not with some other company that we contracted out to. It's with us. So we are your support for your life on Sage Intact. And when you put in a support ticket, that means people are going to know what your system, how your system is set up because we sold it, we implemented it, we know you.
Thanks.
Sure.
Other questions for Jim?
Easy crowd. I know.
All right, Jim, thank you so much.
Thank you.